Good morning, everyone. Happy Monday, and welcome to today's webinar on underwriting bankruptcy for life insurance. My name is Andrea Rasser, and today we're going to unpack how our financial histories, specifically bankruptcy, can affect underwriting outcomes. Our goal here is going to be to help you identify which cases can be placed, how to present them properly, and what red flags we watch for in underwriting. All right, so let's just jump right in to why bankruptcy matters. Underwriters, they look at a lot more than just mortality risk. I know a lot of times when we think about underwriting, we think about our health. But the fact of the matter is they are assessing the financial risk as well. This ties directly to persistence and how likely a client is to maintain their coverage long term. We know that bankruptcy can be a sign of poor money management. A lot of us like to spend our money before it's even in the door. Amazon and home deliveries and everything is made online shopping and one-click buying, so very simple. But we also know that it can be a one-time event. It could be the loss of a loved one, of a partner in the home, that, primary wage earner. It could be divorce, it could be medical bills, it could be business ventures. It doesn't necessarily have to be personal. So there's a lot of different things we look at when we look at bankruptcy. Again, persistency with the policies is key. And obviously financial difficulties, while there's not necessarily comorbidities involved in something like financial underwriting, it can cause emotional stress, and we do see an uptick in suicides when it comes to recent bankruptcies. And so it does have a direct correlation with underwriting. Um, all right, so the next thing we're going to want to look at is the different types of bankruptcies. There are multiple types. These are not the only types of bankruptcy out there. However, these are the three that we see the most often. So these are the three that we'll be focusing on today. Um, the chapter that is filed when a client files bankruptcy will tell the underwriter a lot about what's going on right off the bat. Chapter 7 suggests a full reset is taking place. This is where liquidation occurs, and the applicant will be financially free, but they do have to rebuild their credit at this point and their credibility. This will stay on their credit report anywhere from 7 to 10 years. Those debts are typically discharged. So this is one that we see quite often. Chapter 13 is going to be a repayment plan. This is a debt restructuring. This isn't where the debts are just dismissed. These are restructured. They're repaid back over typically 3 to 5 years. And this is usually used on an individual basis as opposed to businesses. But this shows responsibility. They're keeping that debt. They're just reorganizing that. They're repaying it. They've restructured it, but it did not just disappear. And then with Chapter 11, this is typically more likely to involve business owners. This is where the bankruptcy does not necessarily equal any kind of personal mismanagement. This is a reorganization. This keeps the business in place and moving forward. It's also used for self-employed individuals, but it's more of a reorganization of the business structure and repayment and all that fun stuff. So um, these are the three that we see the most often. Again, that's why we're focusing on these. There are others, like I think chapter 12 is like farmers and fishermen are more likely, but we don't touch on those because I very, very rarely see anything like that. Okay, so when it comes to bankruptcy, we are typically going to see declines right after any chapter is filed. It's not typically going to matter if it's chapter 7, 11, 13, 12, 14, whatever. If it is a new bankruptcy, just within the last year that's been filed, we are going to see mostly declines on that. Each carrier does set its own timelines. So this is not all inclusive as far as what they're all going to do. Most will want to see at least 1 year since a discharge has occurred, or they want to see consistent repayments before approving. Typically with Chapter 13, they will consider coverage during the repayment period if we can show that payments have been made consistently, never late, always on time, there is stable employment. If things have been moving smoothly and we can show that repayment plan and that everything is moving forward as expected, then we can typically get coverage on Chapter 13 at some point, even while it's still in place. As for Chapter 7, that one, they're going to want to see it fully discharged, is what we usually see, and there is a minimum of a 1 to 2 year waiting period for coverage. This will again vary by carrier, and they're going to look at a lot of different things, not just the discharge date. They're going to look at employment, they're going to look at your current credit, they're going to see if all of a sudden we've got 50,000 in new credit card debt. That's going to be taken into consideration. Any kind of liens, tax liens, child support that's in arrears. They're going to take a closer look at the financial history. So these numbers on the screen are not necessarily rule of law. They're just guidelines, and again, they are going to vary by carrier. Okay, so what do the underwriters typically want to see? When we're looking at bankruptcies, we're going to want to know the date that the bankruptcy was filed, and also the date that it was discharged. The reason for the bankruptcy. This is a perfect example and opportunity for a cover letter to make a huge, huge difference in the outcome of this case. A lot of times, the questions on the application, they only tell part of the story. So anything more that the agent or client can provide to explain what has occurred, why it occurred, how it's going to be avoided in the future, all those things can make a difference. Again, current employment and income stability. If they see a bankruptcy a year ago and they see that the client has changed jobs 5 times since then, that's going to be a red flag. They're also going to look at the overall financial picture, the assets and the liabilities, evidence of any responsible financial behavior. Like I said, can't, go and rack up 50 grand in credit card debt a year after you've just discharged your Chapter 7 bankruptcy. And yes, no other major derogatory credit remarks. Again, things like new delinquencies, child support payments not being made, tax liens, all those kind of things are going to be taken into consideration there. All right, so what are the biggest red flags? Our biggest red flags, they're looking for patterns. A pattern is the biggest red flag out there. One bankruptcy due to divorce or medical debt or a failed business venture is forgivable. And that's something that, people deal with every day. We see it all the time. It shouldn't be held against a person. But when they start seeing 2 or 3 bankruptcies with unstable income, that is where we're going to see typically our automatic declines on those. And again, the recency of the bankruptcy, all those things are taken into consideration. All right, let's take a look at a couple of recent cases we've had here. Case study number 1. We had a 42-year-old gentleman. He did file Chapter 13 bankruptcy 4 years ago. He is still in the middle of that repayment plan. That debt has not been fully repaid as of yet. However, he was making consistent payments the entire past 4 years. None were late, always on time. Some were even more than expected. He's employed full time. And so all positives as far as how he's handled this and how he's moving forward with his financial story. We were able to place this at a standard rate. We did have to show a repayment history to the underwriters, which is not anything that's too difficult for a client to obtain. Obviously, it's an extra piece of underwriting, and we hate going back to clients for things. So if that's something we can get on the front end, even better. But if not, we can get it throughout the process, and that's perfectly fine as well. Point being, even though he had a current bankruptcy still pending out there, we were able to get him placed at standard. The next gentleman that we worked with was a 50-year-old business owner. He filed Chapter 7 bankruptcy. This was discharged 18 months ago. It was due to a business failure. Um, he has reestablished the business. He has no delinquencies. He has solid income. There have been no gaps in his employment, nothing along those lines. And we were able to find a carrier to take this at a standard plus rate class. We were able to tell the story, provide a cover letter, let them know everything that's really happened. Not just checked a little yes or no box on the application, but really told the story of how things went with for him and with him and how he's addressing it. This really became key, in my opinion. I mean, it's always been key, don't get me wrong, but we saw a huge influx shortly after COVID. You know, there were a lot of business ventures that went south, and being able to write that cover letter and tell that story and really outline the external factors that were out of the client's control, and you know, the fact that they're making favorable changes and doing what they need to do to get things back on track, that makes a huge difference. I can't reiterate that enough. All right, so from there, how to position the client. So what can we do to ensure the best outcome possible? First and foremost, always want to gather those financial details early. The more we can tell the underwriter up front, and explain in the history and the plan that's in place, the better. You and I, we all know how frustrating it can be to continue to go back to the client for more information, asking more questions. It can start to feel intrusive. It can start to make them feel like they're being judged. I mean, that's kind of a delicate matter, you know, more so to some people than others. A lot of people don't like talking about their financial background, especially if there's something that they personally see as some kind of failure. It doesn't have to be seen that way. So anyways, the more information you can gather in the beginning, the better. Writing a clear cover letter explaining the cause, the resolution, all that stuff. Highlight their job stability. Talk about, you know, they've been with their company for 20 years. Point those things out. Yes, it's on the application, but it doesn't hurt to really paint that picture for the underwriter. One thing you definitely want to avoid is submitting a large face amount immediately after a bankruptcy has been filed. That is going to be a huge red flag. It is likely to be a decline. As I indicated at the beginning of this broadcast, one thing we do see from a medical perspective is an increase in mental health issues and suicide risk. So if we have somebody who's just filed Chapter 7, and you know, a month later they come in and ask for $5 million, that's definitely going to be reason for pause, and definitely will be a decline, I'm afraid. And then always I recommend pre-screen these. Give me a call. We can quick quote these. We can get those details out in front of the underwriters, the carriers, find out who's going to be the most favorable in any given situation. And, you know, even with quick quotes, a lot of times, you know, those are supposed to be very factual, just a few sentences, a few lines of details off to the carriers. But in this situation is the one of a few different times that I try to tell the story in the quick quote and really explain what has happened with this client. Um, just giving cold facts, I don't feel is enough. And so with bankruptcies, I do try to get a little bit of background, you know, and that story and what exactly has occurred for that client and what we're going to do to make it better. So just always remember when it comes to these that positioning matters. Your your job, my job, is to tell that story of financial recovery and not financial failure, because that is not what this is. All right, so again, just some of the key takeaways. bankruptcy does not always mean a decline. If you remember one thing at all, it's that underwriters are not looking to punish. They're looking for reassurance. And so if we can give them that reassurance, and show them there's stability there, be transparent in that history, that can make all the difference in the world. Tell the story, and you can turn what seems like a hard decline into a very placeable case if we just tackle it from the right angle. Again, pre-screen these with IAMS prior to writing them. The last thing you want to do is hit that client and the pride even more with a bunch of declines, and then you've got MIB out there, and then you're getting more questions if you do move to another carrier. So definitely pre-screen those. Let's find that right home the first time. No two carriers are created alike. They all use different reinsurance manuals. They all have different guidelines. And so just because one carrier may take them at standard, another one may be a decline, and vice versa. We need to narrow that down before we start getting negative MIB hits out there. And again, strong agent notes, they can turn these questionable cases into approvals as long as we can explain what has happened, and paint the picture of how this is going to look going forward. And don't forget, IAMS is here to help you with these. We have case studies. We have resources that will help simplify this. I've got hundreds of cases I can go back through and compare it to. We've got quick quote options. Between me, the sales managers, and you in the field, there's always a way. That's just how I see it. I don't like the word no. I don't like to give up. I do like a good challenge. So when you have these, reach out, let us dive in and find the right home for that. We do also have these fact finders out on our website, iamsinc.com. This first one is a semi-generic health screening questionnaire. It does ask some very basic financial background. This is a good fact finder to use before you even met with the client. Maybe send it over to them, get it filled out, so you have an idea of what you're walking into, and what you can reach out to us and find out what other questions do I need to ask once I'm in front of them at the table, and we can tackle that together. One of the other things we do have on our website, iamsinc.com, is health questionnaires that are very, very ailment specific. So if you have a client, you've gotten past, the generic background questions, and you find out that he had a cancer or cardiac history or something like that, and in the recent past, we have questionnaires that are very specific for each of those ailments and can get those over to you so that we do get all the right questions and answers the first time. Again, we can shop those out. You can send those directly to me at andrea@iamsinc.com, and we can go over that history. You can give me a call, 800-255-5055, or you can email our pre-screen inbox, which is just prescreens@iamsinc.com. Either one is fine. You can work with your sales manager, your sales director. They are able to send you those forms if you don't have access to our website for some reason, or you just don't have time. We have those right at our fingertips and can email those over at any given point. And just always remember, I know that these are time consuming on the front end. I know nobody wants to sit and fill out forms. No one wants to go back and forth to their clients 100 times, but these can save an immense amount of time on the back end. If we find the right home the first time, that's going to save you from having to move the case, pivot, rewrite it, frustrate the client. Every time we have to go back out to the client is another opportunity for them to walk away or give up. So the more we can do on the front end, the better. And with that, I remind you to follow and like us on Facebook and LinkedIn. This was a short one today. It was a little different, not doing something regarding medicine or medical histories, but bankruptcy is one that we see show up multiple times per week. So I felt like it was something that we should address. And I do hope it was helpful. And if you have any questions, please do give me a call. 800-255-5055, or email me at andrea@iamsinc.com. Thanks so much and have a great rest of your week.